You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the rockingest show on our network. Yes, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever exciting Options Insider Radio Network. Quite a few programs, including 600 plus archive episodes of this one program alone, the Option Block. Then you add in Vol Views, you add in Options Boot Camp and our daily news show and everything else. Those numbers start to get up there into the stratosphere in terms of total number of episodes and hours that you can consume at your leisure of our content. The easiest place to do that, of course, theoptionsinsider.com, or if you want to just mainline the audio via your platform of choice, we're out there, iTunes, TuneIns, Stitchers, and so on and so forth. Of course, also via our mobile app, available for iOS, Android, and the ever-popular Fire OS. Don't forget, you can always join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR, and you guys can grab that link via our Twitter or Facebook or Stock Twits or wherever else you guys follow us. Also via the website. And just bookmark it because it's the same link all the time. You can always set up an account in Mixlr too, and then you'll be notified when we go live, which is always fun as well. However you listen, live, after the fact, via the app, whatever you do, hit us up with those questions, those comments. We do love to hear from you guys. All right, and joining me on the old program today, let's start off. Let's go in order of proximity here to the old studios. That means we're starting off in the hinterlands of Chicago, the paradise on earth known as St. Charles, Illinois, home of Skippy's Gyros and Italian lemonade. I can vouch for them firsthand. Where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Man, if you love Skippy's that much, just imagine if you would have gone downtown.
Imagine if I had gone to the metropolis, the heart of the megatropolis that is St. Charles. Alas, my schedule did not allow for such a, because we know there's multiple days worth of entertainment and dining and extravaganza in the St. Charles metropolitan area. Unfortunately, I had a scant couple of hours to take it all in. So Skippy's was our destination of choice. All right, and also joining us on the program today, mixing it up a little bit, we're going back out to the East Coast, but not all the way up to the hinterlands of Maine for the rock lobster. No, we're going pretty much straight line across to the coast there, where we're beaming into NYC, where we are joined by the Flowmaster, Mr. Henry Schwartz, the founder and CEO of Trade Alert. Usually he joins me on our Trading Tech Talk program, and he likes to stream this one. He likes to sit in the audience with you guys and enjoy this one live through the Mixlr. But today he's joining us to talk a little bit of flow. We got a lot of stuff popping off today after the bell, so it should be fun. Mr. Schwartz, welcome back to the Option Block program, sir. It has been too long.
Thank you, Mark. I'm happy to be back, and it's nice that it only took me like 8 years of talking to you to get a nickname.
Yeah, that's true. It takes a while. You have to earn it. You know, they don't just come willy-nilly. They have to be earned over time. But I am indeed the dispenser of all things nickname here on the network. I think the Flowmaster is appropriate for what you guys do over there at Trade Alert / Option Alert / What's Trading / all of the above. And it's nice, you know, if you're in the rock lobster seat today, so that means you'll have to forget to unmute yourself a few times and maybe confuse a few time stupids and do a few other fun things that he likes to do on the old show. All right, with the gang assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the program where we break down what caught our eye in today's activity, what was lighting it up, what was moving the markets. Most of the major indices ending the day pretty much unched slightly down a little bit. We got the Qs, kind of the lone laggard there, actually moving in the opposite direction, up about 0.5% or so. So the one little outlier on the day. The rest of the day pretty much unched with a slight red bias on the old screen. The VIX cash also in the red zone as well, giving up close to half a handle or so, right around 1040 and change or so. So well shy of the 15 plus level it was trading at just a week or so ago out there. We'll get more of that, of course, into that on Vol Views tomorrow. But Flowmaster can only be with us for about a half an hour today. So let's kick things off. Henry, we got a lot of things popping off after the bell. But before we get to that, anything in particular catching your eye in today's activity, sir?
Yeah, it is. We're right in the peak of earnings season. So everybody's kind of glued to Amazon and what else? We have StarBucks and a few others. It's been a good week for unusual option activity, though. One of them yesterday in First Solar was a nice little call sweep that where did I have it? Somebody grabbed a bunch of calls right before the stock jumped about $1.50, which was a nice one. And then I was just looking at actually just thinking about kind of recapping a trade we saw in MGM, which had earnings this morning and it's up about 4%, but that was the one we were talking about that I chimed in via Mixler, right? When you guys were talking about it. Looked a lot like a Jan diagonal 20,000 times, which is kind of what any rational person would kind of assume would be trading. But I had a floor show that said it was a stupid, and I kind of, hit the broker. I'm like, "Are you positive?" And he did say yes, and it was kind of confirmed by the fact that there was a block of stock to at least delta hedge it. And that trade, which was confirmed to be stupid, so I do get to be right. The option side of it's up about $3.2 million today. Now it was tied to like 1.3 million shares, which if they kept all that on, that offset about $2.9 million of the gains. So the real question to me is, did they tie it so that they could minimize the execution impact and get a better price and then work out of the stock, or did they really just kind of want that gamma? And there's not really any way to know unless we find the customer someday. But that was kind of one of it's been a good week for the kind of stuff we keep an eye on. And
hence the Rock Lops not joining us today. He took so much umbrage at your questioning of him on the last show. He's like, "That's it, I'm out." And he refused to come on. So playing a little bit of the prima donna today is the Rock Lobster. But we got the Flowmaster sitting in there, so we got good stuff. Before we get to all the other stuff popping off after the bell, Uncle Mike, I almost said cooking your eye. What was catching your eye over there? Maybe you're cooking over there too, I don't know. What was catching your eye over there in St. Charles today, sir?
Oh, we got a big old barbecue going on here. No, just kidding. I would say overall, the downfall of energy is what I am noticing today. Oil was down today, but it's not down as low as it was. It's off the lows. Oil's below 50 again, which it's one where I think I still stand by my call of being a long-term energy bull. But with oil going down like it has, it is difficult for energy stocks to go to the upside typically. So that's one thing that I had noticed today. But overall, the other things that are within the market, the financial sector, XLF is down slightly. The industrials, XLI is down a little bit. So there's not a lot of large downward movement. Today, technology is up a little bit. I'm just looking at XLK, up 21 pennies on the day, or up 0.4%. So there's not a lot of fear or not a lot of things going on from a pricing standpoint. in terms of what is catching my eye, and that's within the market, silver is down a little over 1% today, so we are getting a little bit of a pullback in the shiny stuff. Silver was at its peak about a week ago, a little over a week ago. I think I had read the statistics saying that it was record amounts of people that were actually long silver. So if they were long at $1 higher, maybe they'll get long again soon. We will see. But what I am noticing today, just to go back to kind of the theme I was talking about on Monday, I think a lot of it's macro. Today, I think President Trump threw, I hate to call it a curveball, but for him, it's just a straight pitch because he only throws curveballs a lot of times, but how he doesn't want to get rid of NAFTA now. He wants to just renegotiate it. I think that's going to be something that kind of spooks the market a little bit. Based on the fact that that's something that he ran on, is that he wanted to get rid of NAFTA, and now he's looking to renegotiate it. Now, maybe that's part of Trump's tactic, and that he just wants to, he always asks for something way more than what he wants, and then he knows in his head that he's going to settle for something in the art of the deal, so to speak, to quote his book. Maybe that's the case. Who knows? The other thing with the tax plan, with the Trump tax plan coming out this week, and that they're looking to, I believe, lower corporate rates, simplify and lower income tax rates for individuals, make it just 3 tax brackets at 15%, 25%, 35%. And they don't really claim that that's revenue neutral, but they believe that the growth in the economy will still get more revenue to the government. Now, whether that happens or not, it's not really a topic on this show, but I think with all those things going on, and oh, by the way, North Korea still exists, and there's always something that could happen over there, and so does the Middle East. So I think that on the macro level, it feels like there's a lot of things that we're waiting on as to what could happen. Combine that with the earnings coming up, and I really don't think we're going to have these lower volatility levels for too much longer. Not that I'm a VIX prognosticator by any means, but I just don't see the 10-level VIX staying for much longer.
That certainly could indeed be the case. Speaking of what's the case today, things are popping off after the bell. This is one of our big earnings palooza days. We got a lot of names coming off right now. We got good old Google, aka Alphabet. We got Amazon. We got Intel. We got SBUX. We got a few others. Let's get into it. Looks like the Google number finally just came out. We were waiting for them a little bit. Didn't see the Alphabet number. I should keep I always say Google. But it looks like they were hovering a little bit. They closed today right around 891 and a half or so, right in that range. They were up about $2, so nothing much to net on the day, but they were pricing in about a $29 straddle in that range, so right around 3%. And so far in the after hours, it's upside ahoy, trading up to about 930, almost 931, so up nearly 4.5%. So we were saying last cycle that it seemed like maybe, given the fact that everyone underperformed their straddle, we might see a little bit of tightening this quarter, and as a result, we might see more outperformance. Who knows? We'll see if this is a barometer. This is a big day, so this could be a bellwether for what we see in the rest of the season. Let's see how our friends over there at Amazon, if they can follow suit as well. Amazon closing today right around 918 and change or so after giving up some of their, they were trading a 921 or so earlier, so they had given up some of those gains, still up about 9 handles or so on the day, and they were pricing in a pretty rich straddle, about $37.50 or so in that range, so right around 4%. And so far in the after hours, also a little bit of outperforming. They're up about 4.6%, right around 960, 961 in that range. So far, 2 for 2 not super pricey straddles given what we've seen in the past, and yet, outperforming them both to the upside as well, which is kind of interesting. Of course, this is all first blush stuff, so we have to wait to see how the number shakes out and, of course, where it opens tomorrow. But still, this is interesting first blush info. Moving on to my old stomping grounds, Intel. Of course, good old INTC. They closed right around 37.5 or so, up about half a buck, so a little over 1% on the day today. They were pricing in about $1.20, so a little over 3% out there as well, about 3.2, and actually so far they're off to the downside, about 3.2%. So pretty much exactly in line with what they were pricing in here so far. So Intel kind of playing it straight and the even keel of the bunch so far. Let's see if good old SBUX can rock the boat. SBUX closing today about 61 and a quarter. They were off about a quarter or so on the day. It's right around 0.5%. This is the name that was pricing in almost 250 for a straddle, so right around 4%. And so far in the after hours, they're off just shy of 3%, right around 59.5 or so in the after hours. So that's our first blush look here. Mr. Henry, aka the Flow Master. I know you guys, this is probably a busy time for you guys over there at Trade Alert / What's Trading as well. Anything catching your eye either with interesting flow with these names or the straddles? Are you also kind of buying maybe the narrative? And again, it could be a false narrative. We're kind of just going on one quarter's data here. But, last quarter, it seemed like the narrative was everybody overpriced their straddles, and we kind of had a resounding meh as a result from the quarter. Are you thinking maybe we're poised for a little bit of outperformance this quarter, or do you think it's going to be more the same as last time?
I was at Merrill yesterday talking to a couple sales guys, and we were talking about the letter X, which just imploded after earnings. But this sales guy was kind of lamenting the fact that the early earnings straddles underperformed, and there's a handful of institutional customers that'll trade those. But if they don't make money, on one out of 3 or 4 of them, they'd kind of give up early in the cycle. And he said that they'd given up this year, so there wasn't much going on.
He's done for the whole year? Just one bad quarter? I said he's done
for the cycle.
Oh, okay. I was going to say, wow, he gives up easily.
Yeah, but he said, with these guys, if they they have one nasty experience, they just kind of shy away from that trade. And I mean, in the end, most of the academic studies show that it's kind of a wash with some kind of gnarly volatility if you try to trade earnings from the long or the short side. Most of the papers I've seen say that the straddles in general are priced about right. I think some people do pretty well if they're very, very meticulous about kind of keeping score and readjusting. But it's a lot of kind of manual labor to try to figure out, especially in correlated names, is where it would probably work best. Are straddles underpriced or overpriced? And this year it seems like it is kind of a big meh. Some little pockets of excitement and some trades. There was definitely some Starbucks trading in front of it today. I mean, it was calls over puts like 8-6. So most of them with May 65 calls were kind of seeing most of the action. So looks like that one they might have gotten wrong. Letter X, they obviously that big call spread almost went to zero 20,000 times. Even though it was a longer dated call spread, so they certainly have a chance to hang on while America is made great again. And these infrastructure names maybe will pick up or will recover. We'll see.
Good old X, of course, U.S. Steel Corp, a legacy name if ever there was one. It's kind of funny. We just saw the Widowmaker reporting last week, and they're always known for a good outperform to the upside or to the downside. They're always known, at the very least, for a tumultuous earning period. And there was one point there, it was in the after hours, admittedly, but still, there was one point in that topsy-turvy which is usually topsy-turvy period, uncharacteristically quiet for Netflix, where it was literally unched. I don't think I've ever seen that before in Netflix, where not just where it kind of maybe where it starts and then it starts rocking and rolling. It was moving around for a while, then it settled back, unched, which I've never seen. And there were a lot of premium sellers out there who had huge smiles on their face. Of course, it ended up opening down a bit, but nowhere near what they were pricing in, and being turned out to be one of the underperformers from a earnings straddle perspective. So a lot of people thought maybe that would set the tone, but who knows? Maybe if these trends persist, perhaps Amazon and I almost said Apple, Amazon and Google could buck the trend. Mr. Uncle Mike, any thoughts here on this earnings palooza preview here?
Well, I mean, we'll see if it continues with what's going on right now. Meh is the word.
Yeah, so far. What isn't meh, though, is getting a chance to do some fun odd block with the Flow Master. So let's do it. Let's dive right on into the odd block. Don't worry, we'll check back in on these earnings names throughout the show, so we'll be back to them. Don't worry.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, everybody. Welcome to the Odd Block. This is indeed the portion of the show where we break down the weird, the wild, the head-scratching, the sometimes debatable paper, as we saw last show, where we had a nice little back and forth between the Rock Lobster and, of course, the Flowmaster, who was in the chat room, chiming in about some funky time stupids. Stupids in and of themselves, you don't see a lot of those going up, let alone in the time variety. So easy to see how maybe the Rock Lobster was led astray on that one. But yeah, Henry doing a little due diligence there, getting the floor scoop on that one. And it was indeed a time stupid, which if that was the case, interesting. Shall we? Tied time stupid. How often do you see those going up? Speaking of things you saw going up, I asked you to come on the show today. I said, Henry, a.k.a. the Flowmaster, I said, well, you guys are seeing all kinds of crazy stuff over there in Trade Alert. What, besides the stuff, we obviously highlight a lot of unusual activity at the Options Insider every day, but what are you seeing? What's coming to the table for you? And you highlighted one I don't think we've ever talked about before on the show. Applied, this is an easy one to say for me. Applied Optoelectronics Inc, ticker symbol AAOI. Closing today, $49.36, up about $1.89, so about 4%. So a rock'em sock'em day for this one. This is the name that averages about 2,400 contracts a day. Today, doing nearly 10,000. Almost 5-to-1 calls over puts. This one was on your radar today, Mr. Flowmaster. So regale us, sir. What did you see out there? What caught your eye?
Sure. So yeah, this is one I had to go look it up at Yahoo to figure out what it was they did, because AAOI is not a popular name, although it has picked up from average daily volume, barely in the hundreds, into close to a couple thousand over the last month or two. And if you look at the chart, implied volatility has jacked up. So it is a name that's, and I didn't find any M&A news on it, but it's a name that has basically doubled from $24 since January, and volatility's gone with it basically. It was almost 10,000 contracts today. 8,000 of them were calls, and most of that was in the May 45s and 50s as the stock was lifting up. So, we're kind of always looking for these conditions where, the stars all align, which is, heavy, obvious call buying, as much as possible through these anonymous high-speed sweep routers that maximize liquidity available. The biggest piece of this one was around 12:15 New York time, when somebody lifted 900 May 50 calls for 255. And stock was at 47.70 then. Okay, stock finished 49.5 almost. So that was one that had a lot of juice to it, and was kind of fun to keep an eye on. And then the other one I wanted to talk about was First Solar, which I mentioned in the intro a little bit. Somebody bought some calls, May 29 calls in there yesterday, and 10:20 in the morning, the stock was under $29, and it got upgraded this morning. So trading in front of an upgrade.
Oh, that's old school. That's like standing down the SIBO. They lift your offer on some calls right at the close, and then they get upgraded before they open the next morning, before you even got your stock. So that's good to see the old school fix is still in.
It could also be, remember, the Russians that were hacking the news release services.
Oh, yes, there we go.
Right?
Our favorite. The Russians who had the best scam going. Lowest hanging fruit on the planet, and they made millions off of it. Ballyhoo to them.
Yeah, the wire services were the target there. So, I mean, this was upgraded, I think, at 3 different banks or securities places today. So, like I said, it's been a good week for some of these. It also could be that this market is so hot and cold on volatility. We have days where we move 20 handles, and then we have more days where we barely move 6 handles. And I think when nothing's going on and everybody's just kind of staring at their screens looking for something to do, some of these unusual call buying, especially conditions, they draw in speculators and gurus and everybody else, and it's doesn't take much for the liquidity guys on the stock side to back off, and it becomes a feedback loop, and people buy calls because the stock's running up, and the stock's running up because people are buying calls. So it's been a good week to say, why does it matter? Why is it worth keeping an eye on the option flow?
Before you got to hop off, I know you got to hop off in a few minutes. I'm glad you could join us here, at least for the beginning and for the Odd Block. I know the Rock Lobster wanted to send one your way for your perusal as well. See, he does value your opinion, even though he does disparage it on occasion. He's throwing up this one. It's our old friend Nabors Industries Ltd. Talked about this one a few times on the Odd Block, rearing his ugly head again today. Ticker symbol NBR. Closing today right around $10.55, off about $1.20, so about 10%. So not exactly a banner day for a good old Nabor. This is the name that does about 3,800 contracts a day, doing a whopping almost 58,000 today. So size paper out here, 1.5 to 1 about calls over put. So pretty straight up volume. And of that 58,000, a good chunk, not quite half, but a good chunk coming on these June 13s, what the Rock Lobster liberally terms as a cage match, where we saw starting off the day 23,000 of these June 13s going up in one block for 15 cents. So we got a block trade. Looks like they were actually buying for 15 cents. Then afterwards, hence the cage match, we saw scattered selling of another couple of thousand, crushing it all the way down to 9 cents. So maybe that block awakened some love for this strike, and people saying, hey, we want to get some of that action. Again, scattered selling, they're down a bit on the day. These calls went out a dime at 14 cents. So since you are the flow master, sir, I don't know if this one came across your radar today. Are you agreeing with this cage match sentiment? And do you have any extra thoughts here on Nabors before you got to run?
I did actually notice that one as it hit, because it was a big trade. I tend to put a little bit less faith into a trade at post earnings, because I think that you end up with a lot of people trying to lock in a winner or play a bounce. But we're kind of looking for the unusually well-informed traders. And in this case, because it was after earnings and because it was one block and I didn't see any nibbling ahead of it. Basically, it was just one big old block. And because it printed SBUX also, you tend to, those trades that print on the floors, right? I mean, you remember this is, Philly, SBUX, Amex, they have a little bit more chance to have the information leak out before the trade prints. So, in a case like this, I would go and try very hard to figure out, not that this had a ton of delta to it, but try to figure out if maybe a little pre-hedging took place, which might have already juiced the stock up, a nickel or a dime, and then they're printing the options later. So, but it was a really big, opening out of the money call. So at first glance, I would have said the same thing, which is, wow, somebody thinks this thing's going to turn around. But it did not. It just crumbled away.
Speaking of crumbling away, you have to crumble away right now, sir. But before you go, listeners are liking what they're hearing from what you guys have to offer. Where should they go? What should they do? What can they do with you guys?
Well, we have a couple new exciting things. People should come over to TradeAlert.com and demo us if they have, if they're an active trader. We just rolled out two big enhancements. One is a very high quality theoretical value on every single trade. So if you get, in fact, these Nabors calls, not only do we identify it as a buy side, an offer side trade, which is usually a buyer, and we've always crunched, the Greeks so that we know the volatilities, if it's getting bid up. But we actually also have a reference value from a company in Chicago called FT Options, where very high quality market maker quality theoreticals, and at the time of the trade they had these things worth 13 cents, which is really crucial, because now you have three ways to kind of identify if it's a buyer or seller. If it's above Theo, usually it's a buyer. If it's above Theo and it's on the offer, it sure looks like a buyer. And if it's above Theo and it's on the offer and the volatility change is positive, I'd bet some pretty big money it was a buyer. So in these calls, I have no doubt about it being a buyer. How well informed they were seems to be the problem there. But so come to TradeAlert.com and check it out. And you can even do some nifty queries like show me the trade today with the biggest edge in it, in terms of if you go with the old market maker lingo. And you can actually find trades that had 20, 30 cents of edge in them. They're still out there.
Wow, they exist. I thought edge was just kind of a theoretical term at this point.
It's funny in Apple or something like that. It's probably somewhat meaningless. You could use midpoint and get away with it. But when you look at longer dated expirations, or once you get away from the top 100 names, something's 50 cents, $2 on the screen, the midpoint isn't really going to do you much good either. So check out TradeAlert.com, sign up for a trial, and we will impress you.
Thank you, Mr. Flowmaster. You may now head on about the country. And again, check it out at TradeAlert.com. We use it all the time if you want the more retail-oriented tool. What'sTrading.com is the place for you to go. And again, we do literally use it all the time. It's the reason why Henry's always listening to our stuff and chiming in, because we're always references his stuff and using his tools. And it's one of the definite analytical tools. People always ask me, what am I running all the time on my desktop? I obviously have the live vol for kind of some of the real-time analytics. And then when I flag something, I identify something when I really want to kind of drill down a little bit more, Trade Alert is my next stop where I kind of dive in and really just do a lot of that deep analysis like Henry was just talking about the edge, about opening, where they executed on the bid and offer, and a lot of that kind of stuff that you can really do in deep detail over there. So check it out. If you want the full tool set, Trade Alert. If you want the more, I think, a bite-sized version for some active retail, a little bit more affordable as well, What'sTrading.com is the place for you. All right, Uncle Mike, you got your big boy pants on. You ready to do another odd block or two with me before we head on into the strategy block, sir?
Oh, my big boy pants are always on. Baby, let's hit it.
All right, let's do it. I will give you pride of place, sir. I will let you choose, since you don't get to chime in on the odd block too often. Do you want to do underwater calls in Yandex, or shall we do a funky put roll in ILG? What are you feeling?
Let's do the underwater calls.
I had a feeling you were going that way. You know, I've been doing this show with you for too long now, sir, because I already had it queued up on my machine. That's how I knew you were going that way. I already pulled it up. Yes, Yandex. This name does sound familiar. I believe we talked about it once or twice on the Odd Block in the past, even though it has been quite a while. This is the name closing today, 2740, up about 250 or about 10%. So a good day for Yandex NV, ticker symbol YNDX. This is the name that does about 2,000 contracts a day. Today doing about 6x, about 12,000, a little bit less than that. And of that, about 16 to 1 calls over puts. And if you're looking where the action was today, we have a couple of them going up today, starting off with some Yandex. These are expiring on the 28th. Looks like the 25 calls going up for, about $1.75, as well as the over the May, so straight up monthly, expiring on the 19th here. What do we have here? 23 halves. Those also going up about 2,000 times. Doing those for $3.20. Going up in two blocks over there on the Amex. Both of them, the weird thing about it now, both of them trading near parity or even below parity, usually indicating that that's a bit of a seller. And you don't usually close things out for below parity unless you're probably sitting on a long and you got some money in it. You don't care if you give up a little bit of quote unquote edge to close it out, or maybe you got to get out, you got to heck out of Dodge, and so you're willing to take a little bit of a hit on that. Again, implied vol down substantially on both as well. So of course we have earnings kind of clouding that picture a little bit as well. So it could have been these were some earnings specs, and we talked stupids, accidental stupids perhaps, on Monday's show. Looks like perhaps we had a bit of a time stupid on here as well. About 2,700 calls open on these weekly April 25s, and on the Mays we have about 2,000, almost exactly 2,000. So it looks like we had someone who was perhaps spreading their bets a little bit, which is weird if you're doing an earnings spec, because we do know where the earnings event is. So spreading it out a little bit like that is a little weird. It's also weird that they would kind of decide to close out both. But again, we did have earnings before the bell today, and things rallying. So clearly, perhaps our friend is deciding things popping, things are looking good. Take my calls, take them while I can get them. Let's look back at the year that was here in good old Yandex. This thing has had not too much of a range. Got as low as about almost a little bit shy of 18 back in November of last year before hitting its high. Literally the high is today, 27.5 or so. Let's see how high it got intraday. Yeah, about 27.5. So we're at the upper end of that range right now. Mr. Uncle Mike, what are you feeling on this one? You think we have yet another stupid going up here. We had a friend here who perhaps was a little indecisive on when the earnings event was, or he just wanted to spread his deltas and his liquidity out a little bit. So doing a nice little 2,000 lot time stupid and taking it off today, or you think something else was afoot here?
I think there would be something else. The first choice that you had given, maybe getting the earnings date wrong. Maybe he was listening to the show and how Mark Longo is always known for telling people the wrong earnings dates. Or is
I don't
that
know
just
what you're talking about, sir. I would never lie about a sacred thing like earnings.
Well, I guess only to me you do that. But anyway, so I don't know if it's that necessarily, but I think this is one of those ones where it's one piece of a bigger pie. Yes, you could have a stupid with this much paper, but it's typically not a common thing. The only other thing I could think of is maybe it's a much greater position with some underlying involved in some way, shape, or form, to where they're taking off the profitable good parts of it. And there might be some other parts of it that might not be doing so well, and maybe they took off the hedge. I think this is what I'm hoping this is a complex trade, an Andrew Giovinazzi style do stuff maneuver where we're not seeing the full picture.
I'm kind of with you on that sense. I do hope there are missing legs that we are unfamiliar with, because who knows? Maybe he was size short. He wanted to spread his hedges out in the stock. Either way, that one doesn't smell it. Nothing really smells great on this trade here. So it's got a whiff of weirdness about it, which is again why it's in the odd block. It could just be what it seems like on the surface. A time stupid. You know my feelings on those. I think we have some questions about stupids a little bit later. But before we get to that, it is Thursday, listeners. That means it's time for Uncle Mike to put on his even bigger boy pants, because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. It's Thursday. It means it's time for Uncle Mike to come on down from on high, stone tablets, bubble pipe, and perhaps an options textbook in his hands to dispense some options, wit, and or wisdom. Uncle Mike, we're set up for an epic strategy block. You got some good time to really mine some information, perhaps some wit and or wisdom. The choice is yours. Maybe we'll get both today. We'll see. Uncle Mike, what you got for us, sir?
All right, I want to go through a situation of a trade that I made today, actually, and I want to relate it to the 6 factors of option pricing. So first off, let's set the stage and let's talk about the 6 factors of option pricing. This will be a good review for some of you, and for if you're a newer listener or newer to trading, it's something that you should really not only know, but you really need to embrace. Everyone teaches it and talks about it and thinks about it in a different manner, but what I'm about to say is very universal from the concept of what you need to know as an option trader. Factor number 1, delta, or movement of the underlying. This one is the one that's the most simple in most options, that if the stock goes up, call goes up. Stock goes down, call goes down. Now, that's under the assumption that all other factors remain constant. The measurement of how much the stock is going to go up based on, that the option will go up based on a $1 movement in the underlying is known as delta. So that's the first factor of option pricing. So if you're bullish, buy calls. Not necessarily. Second factor of option pricing gets a little bit more complex, but I think it's the kind of easy to understand once you think about it a little bit, is time decay. Every option has time decay, meaning that unless the option is a 100 delta option, and even if it is a 100 delta option, you're going to have such a wide bid-ask spread, it's usually difficult to trade those. But every option, or I should say almost every option, will have some type of time decay factor involved in it. Meaning that let's say an option is at the money or out of the money. Meaning XYZ stock is at 50, the 50 calls or any call above 50, it's 100% time value. So that means that between today and tomorrow, assuming all other factors remain constant, that option is going to be worth less money. Now, once again, that's under the assumption that all other factors remain constant, meaning the stock stays the same and these other factors stay the same as well. So with that being said, an option buyer is at a disadvantage in terms of time decay. However, an option seller is at an advantage. Now, does that mean that you should always be an option seller? Good gosh, no, because there's plenty of other factors to consider. For the remaining 4 I'm going to mention that you need to have an understanding of if you are an option trader. Third factor that's involved, that would be implied volatility. This is one that Andrew talks about constantly, and everyone needs to understand the basic concept of this. Now, I don't get into the VIX as much as Andrew does. That's kind of his bread and butter. It's not where I live, so to speak. But I look at volatility in every option trade that I make. It's extremely important in that if there's implied volatility, oversimplified example. Let's take that at the money 50 call again that we had talked about a second ago. And let's say that the next day, the stock is not trading, meaning the stock is just, it's not going to trade because they have a big announcement that they're going to make. But the options are trading. Now, I don't know if that would ever be the case, but let's just assume for a second it is because I'm giving an extreme example. Well, all of a sudden, rumors are flying that XYZ stock over here has found the cure for cancer. Well, if that's the case, and that's the big announcement that they're going to make, it's very likely that that stock is going to go higher in value. And so there's going to be a mass of buyers on that 50 call. And what that would be is an increase in implied volatility because the value of the call would go higher. Now, with that being said, let's say that there's rumors going about that something bad is going to happen. And all of a sudden, everybody's buying all these put options. Well, the stock's not going down, but all the value of these put options are going way higher because there's so many put buyers, because there's all these rumors of all the bad things that are going to happen. Well, that would be an increase in volatility on the put side of it. Now, I'm not going to get into volatility skew, how it affects the market, and how it could affect it, and things like that. But that is the concept of something that you need to have an understanding of when trading options. Now, what's the next factor? Well, that's gamma, or strike price selection. Here's what I mean by that. Let's say that a stock or an option is a 50 delta option. It's an at-the-money option, and it's a 50 delta option. Well, as that stock goes higher, that delta will likely go higher, assuming all other factors remain constant. And that delta is going to go higher because it's becoming further in the money. An in-the-money option doesn't always necessarily have to stay an in-the-money option. Same with at the money or out of the money. That can change at the drop of a hat. Holy cow, Mike, you're losing me. I thought if it's a 50 call, the strike price stays the same now always until expiration. It does. But let me elaborate on that a little bit. Stock's at 50, strike price is at 50. If that's the case, then the call is at the money. The stock goes higher in value to say 52, that call is now in the money. Stock goes down in value to 48, that call is out of the money. So with that, the strike price changes not from the numeric portion of it, but from whether it is in the money, at the money, or out of the money. So by doing that, the delta will change on it. Options that are further in the money will have a higher delta, meaning it'll have a greater relationship to the movement of the underlying. Options that are out of the money will have a lesser delta, meaning that they will have less of a relationship to the movement of the underlying. That changes with the strike price changing from being in the money, at the money, or out of the money. We have gone through 4 factors thus far. 5th factor, row. It's always fun. Mark Longo loves hearing about row and talking about row.
I could do 2 hours just on row, sir. Go for it.
This is the one that it's really not much of a factor in this day and age, I don't think. I mean, it could be on leaps, but row means interest rate. The way you remember it is R for row, R for rate. That's how I always remembered it. I remember my first ever interview in the business. This is before the days of smartphones. I remember I was on the train going into Options Express thinking, oh no, they're going to quiz me on this. And I was very new to the business, so I called up my buddy, what is row? What the heck is row? So he looked it up online for me, and I remember that's how I remember about row. That's the delta. That's the Greek for it. So what row is, or the way with which interest rates work, is that, think of it this way. If I buy a call option, I could spend less money and still control 100 shares of stock. But with that remaining money, I could put it into some type of an interest-bearing account. Now, maybe that's a savings account, maybe that's a CD, whatever the case may be, and I still have all the upside of the call option, let's say, and I also didn't have to tie up all that cash in stock. I was putting it in a nice interest-bearing account. Well, that's row. And so interest rates are a factor in option pricing, meaning that if interest rates were to increase, then call values would increase. And if interest rates were to decrease, call values would decrease. It's an inverse relationship with puts. Now, explaining inverse relationships with row, that's far beyond where I want to go to on today's strategy block. I'll save that one for a Sebastian webinar on how interest rates have an inverse relationship with row for put options. But nonetheless, it is an issue, not a huge one, but if, let's say, for example, everything else is in a vacuum and the Fed were to raise rates 2 full points one day. Now, if the Fed were to just all of a sudden raise rates 2 full points, then, well, that would probably make the markets go haywire. But let's just assume everything's in a vacuum and markets have to stay still and just for whatever reason they stay still. If we had that much of an interest rate increase, call values would increase dramatically. So my point is that row's a factor, but within this very low interest rate environment we have now, it's not much of one. Final factor, dividend pricing. Let's say that the stock pays a significant dividend, like maybe one of your bank stocks or something that pays 4 or 5% in dividend. If that's the case, the call values are going to be less than the put values, meaning is that there's no free ride in option trading. You might look and say, oh, okay, well, if the stock pays a dividend, I can buy the stock, collect the dividend, and get the covered call. I am just so smart. Well, that's fine, but by selling the put, the value of that dividend is going to be factored in. And that goes back to the synthetic discussion that we've had in other times on this show. So dividend pricing, the dividend, if there is a dividend on the stock, is a factor. If there's no dividend, then it is no factor. Now, we could talk about these pricing factors I've done many hour-long presentations several hours long just on what I talked about in 10 minutes. But I want to get to where this talks about, or where I'm going somewhere with this for today's strategy block. Right now, it's my belief that implied volatility is low. I believe that that's my personal conviction. I don't see us staying at the 10 level on the VIX. Now, in terms of what the future prices are on the VIX futures and that type of thing, I'm not getting into that and don't care to. But my point is that I believe right now you can buy some premium at very reasonable prices. However, as I've said on this show at least 6 million times, I'm convinced, I'm long-term bullish, short-term cautious. I'm in a very cautious state right now because of the fact that we are, with all the things that are happening, we still have not made new all-time highs in the S&P since Trump's speech, basically, or since his State of the Union address. Now, does that mean that we could? Where are we going to go from here? I don't know, but that is kind of a cautious concern of mine. I personally like selling puts and put spreads on dips. We haven't had a ton of dips lately, and when that happens, we're still not, I don't know if we're going to get a huge bump in vol because it's very low. So I'm at a stage right now to where, on the one hand, I believe that premium is very cheap. So in other words, Vega or volatility, that factor of option pricing, I believe it's a time to be a buyer of it. However, on the flip side, I think that I don't know if I really want to jump into this market full steam right now because of the reasons with which I just mentioned. And on top of that, I don't know if even if we did get like maybe a 1 or 2% dip in the market, I don't know if that would bring up volatility enough to justify selling a put. So what is a bullish person such as myself to do? I don't know. Well, wait, I do know. This is what I decided to do today. I decided to just buy a call spread. I bought a 3-week call spread. I bought the SPY 235, 240 half call spread. I paid, I believe it was $3.60 some odd cents. I'd have to look to see what all the fill prices were. I haven't calculated all that yet, but let's just say $3.65. SPY closed roughly 238.60 today. So my objective on is I didn't want any time decay factored in, meaning that if it were to do nothing until expiration, I'd be break even, which is where I want to be on it. So with that, my concept is that I'm not worried about not getting enough premium by selling premium because I'm a premium buyer. I still sold a little bit because I don't want any time decay in this trade whatsoever. But on the flip side, I really don't want to be all out long right now because I'm kind of concerned with Delta. I like where we are as a premium buyer on the Vega side of it. I don't want anything to do with Theta, so I already neutralized that by selling the premium. And for the Delta, this is what I did. I took on a half position contract-wise. So normally, what I like to do, my rules, I can go up to 100 Delta with my SPY levered strategy. But right now, the trade itself, it's 30-some Deltas. I'm roughly 15 Deltas because of the fact that I took on a half a position. So if we do go higher, I'm going to be in there at a very attractive level because I have the ability right now, if someone wanted to get control of SPY, and let's assume expiration day risk for a second, if somebody wanted to get control of that, they would have to buy 100 shares of SPY, ride it from 238.5 to 240.5 to get roughly a 1% gain, and they would have to shell out roughly over $23,000. Well, per contract, I shelled out $360, and I'm getting the same thing. I'm excited about that. So, with that being said, you might say, well, but Mike, you're an option block guy. You're a host of the option block. How can you say such a thing? You know that in reality, that expiration day risk is not real life. The market can go up to 240.5 tomorrow, and you know darn well you're not going to get that full movement because your deltas are not that high. I'm glad you said that, whoever is thinking that, because I know I sure would be if I was listening to this. You're right. So the way I'm viewing this is that I could, in order for me to get, I have roughly, let's say 35 deltas on the trade, net deltas, the long deltas on the 235, the short deltas on the 240.5. So let's just say that I have roughly 33 1/3 deltas. Well, with that, I would have to shell out. That means that if the stock moves up $1, my option strategy will move up 33 cents roughly. Well, if I wanted to make that same profit by just trading stock, I'd have to shell out still over $7,000 to do that from an equivalency standpoint. Whereas by using the option to do it, I'm only using $3.60, or I'm sorry, $360 roughly. So still, even with that, if you're looking at today's real life movement of what would likely happen, then I'm still able to capture the same movement of the underlying with only 5% of the overall risk on the table. To me, that's the magic of options and how that can work. Now, understand, I just mentioned 6 factors of option pricing. If all of a sudden volatility goes crazy on one option and doesn't move a lot on the other, this could all be foiled. A lot of things can happen on this. So you need to understand what all the factors are involved with this. But I wanted to go over my thinking for a trade like today, why I do it. There's reasons for everything with which you do in trading. And if you can't explain it in a longer format like this, then you probably shouldn't make the trade. So that is the epic long strategy block for today, the final day of April 2017, at least final day for this show anyway.
Well done, Mr. Uncle Mike. And all right, we got to keep on rolling. I was going to squeeze in a little stupids question. I don't know if we have time for that. Let's keep on rolling, though, into our final segment for some more earnings analysis. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, you guys will recall we asked you to start the week. Big names earnings season is upon us. What is your pick for the biggest move post earnings? We gave you 4 choices: Amazon, Google, Chipotle, and Microsoft. Uncle Mike, I forget who you chose, but if you want to change it, now is your chance, sir, before I reveal what the rankings are so far.
Without looking, I'll still stay with Amazon.
And you are still in the lead, sir. 36%. The numbers have been flopping a bit, but 36% right now. Feeling the love for Amazon. 30% for Chipotle. 26% for Google. And a paltry 8% for Microsoft. Let's go check in with our friends here before we wrap up the show, because it is indeed big earnings season. Remember, we said Alphabet kicking things off. They were pricing in about $29 or about 3.2%. They were outperforming to the upside. That is still the case. They're moving about 4.5% or nearly $40. So a good $10+ more than what they priced in here as their straddle. So keeping that lead on their straddle, which is kind of interesting. Next up, we have good old Amazon. They were pricing in about $37.50 or right around 4%. They were outperforming to the upside. They've come back a little bit since then. They're up about 34.5, so a little bit shy, about 3.75%. So close, ever so close to where that straddle was pricing in, but no cigar as of yet. Again, we shall see how that holds up. Intel pricing in, they closed about 37.5, close to it. They pricing in about $1.20. They were off actually about a little over 3%. They're off about $1.50, so right around 4%. So outperforming their straddle to the downside this time. And last but certainly not least, good old SBUX. Yes, I'm talking Starbucks, of course. This is the name that closed right around 61.30 or so. They're pricing in nearly 250 out there, so right around 4% for the straddle, and so far they're off about 275, so about 4.5%. So I don't know, Uncle Mike, are you buying this narrative? We might be seeing a little bit of outperformance here for this quarter. I think this is kind of just a blip, and it's going to be another kind of quarter.
I could see some outperformance. I think tomorrow we'll find out for sure, because we even said for this contest we're gonna wait until the next day's open. But I could still see some outperformance. I just think in general volatility is low, and I could see outperformance, not necessarily in these specific names, but I feel confident we'll have some outperformance across the board just with the vol this low.
Yeah, it's at a certain point. Things get so cheap. As you awoke to on Monday when VIX gets cheap, things start happening in your positions that you didn't intend, which is always interesting. Before we wrap up here, Uncle Mike, what are you keeping an eye, aside from all this earnings palooza, what are you keeping an eye on for the rest of this week into the old weekend?
Macro. There's a lot going on right now in the world, and we got the NFL draft too. So maybe if the Chicago Bears have a good pick, then maybe that could move the market.
Certainly can in Chicago. We know that for sure. So stay tuned.
No doubt.
Stay tuned for that. We can move a few S&Ps off a draft pick out here. It's been known to happen on occasion. All right, listeners. That music means we've come to the end of it was an epic show again today. You had the Flowmaster joining us for a little while. No Rock Lobster. That's always a good thing. Get to shake off that Rock Lobster umbrage out there. And Uncle Mike doing an epic strategy block. We didn't get any questions today, unfortunately, but don't worry. We'll get you on Monday. That's when the mail block is supposed to be. Sometimes we try to squeeze some in on Thursday. Can't always make that happen. Had a lot of big earnings popping off, so we'll keep an eye on those. More coming as the season progresses. And, of course, Rock Lobster couldn't be here, but I'll give him a plug anyway. I don't know why. But we'll give him a plug. Head on over to optionpit.com to learn more about their master classes and all the other seminars and webinars and things that they do over there on a regular basis, over there in the land of the pit. And, of course, I want to thank our guest, Henry Schwartz, a.k.a. the Flowmaster, over there at Trade Alert. If you want the full professional-grade tool, Trade Alert is where you want to go. If you want to go for maybe a little more bite-size, kick the tires a little bit, watch trading might be a little bit easier for you. But either way, if you like this kind of analysis we do, you want a tool to help you do that, that's the place to go. And last but not least, Mr. Uncle Mike, what is cooking in the land of all things RCM Wealth Advisors, sir?
Hey, we're not going to do this much longer, but I am going to plug the umbrage master himself, Andrew Giovinazzi. If you want to become an RCM client, if you are trading on your own and you believe that you trade frequently enough to save money on commissions, because if you trade through us, you would get the same commission rate that we get, and we negotiate a really good one because we have hundreds of millions of dollars under management, feel free to give me a call. And if you become a client, then you'll be able to get 1 free hour with the Rock Lobster himself to discuss anything options that you would like, or other things if you'd really like to. But if I had an hour with him, he's pretty good to talk to about options. So give me a call if you are interested in taking the Pepsi Challenge to see if you can save money on commissions, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
I like that. Pepsi Challenge. You should copyright that, sir. I think that works for you. No one's done that before, I don't think.
I've never heard that. I can't believe that Pepsi hasn't done that. Oh wait, hold on. Never mind.
They're missing a great opportunity. Check them out there and do the Pepsi challenge for yourself. Compare your rates. I bet you they can get you a deal. So if you're a pretty active trader, it might be a way to go. And once in a while, you get to pick Uncle Mike's brain. There are certainly worse things than that. And if you sign up over there, you also get an hour to pick the Rock Lobster's brain. So it's like 2 brains for the price of 1, or perhaps even none, because Rock Lobster kind of is free. So there you go. So check him out over there. Reach out to him, M Tosaw RCMFS, or via his number, which I always forget, but he just listed for you. So check it out there. And of course, we'll see you tomorrow for all of our live listeners for a bunch of shows. We got, of course, Vol Views, noon Central, and TWIFO, 1:30 p.m. Central. And for all our Odd Blocker and Option Block fans, we'll see you again on Monday for more of the old Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.